Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we've got CPI today, and I gotta admit, I'm pretty biased here. I would just love nothing more than to see that CPI number come out, be light, and just absolutely obliterate all of these shorts in the treasuries. But we'll see what happens. Consensus expectation is about 3%. I think that that's pretty reasonable. And hey, we're here on time today, so let's go and check out the charts before the news comes out. Let's make sure we got the voice news on. We got Twitter loaded up here. Okay, so the treasuries, a little bit of selling in the overnight session yesterday, but 4 hours session actually mostly up. Overnight session, not a whole lot of activity, it's just kind of flat. Same here in the S&P 500. So as much activity as I saw on social media yesterday, a lot of people talking about, what's going on and why the market moved the way that it did and everything. It really doesn't look to me like that much money moved over the weekend and on Monday. It looks like that they're waiting for CPI. Oil. Okay, oil came back pretty good clip from a really, really strong rally. That is quite a turnaround. But hey, they're on the upside again this morning. Gold kind of back down here in the 32.50 area. Silver doing some interesting stuff relative to gold lately. It's like, well, it feels like more decoupled to me. I don't know how to put it. Copper's still just kind of languishing. It's just like not there. Japanese yen still reeling from that move over the weekend. And Bitcoin pulled back a decent amount. They're back to 103. I mean, anything above 100,000, I think that the crypto community is going to be happy with. So, yeah. All right, let's see here. There was a little bit of noise in Discord. Let me take care of that. And I think I should, we'll do that later. It's a little hot in here. I think I'm gonna turn the fan on. I opened the window and I think I'm gonna turn the fan on to circulate the air a little bit better. Larry Summer says, no question, Trump blinked on China tariffs. Maybe we should wait until after CPI to talk about that, huh? Interesting liquidity there in the middle. Amir, good morning. Financial Times says foreign investors bought a record amount of Japanese equities and bonds in April. I'm gearing myself up and everything for like to trade this, but I'm looking at it now and this. No, this is a crapshoot. They're really, really pulling for this. We're going to have a very extreme move off of whatever happens, I think. Woo! Zero spot 2 versus spot 3. I like it. I like what I hear. How far can this go? Well, already getting a little bit of backwash here in the 10-year treasuries. So this is kind of an area where it's like, I would find myself with my position here. And like, even if they did go further, it kind of washes back to that spot. So I'm always a little bit weary about that spot. Let's see what they do here. The net change was about 13,000 contracts positive. Now that things are going, let's give it 5 minutes and then we'll turn the robot on. Jim Iorio, but tariffs. Trump, how is inflation slowing? Yeah. We tried to tell you. We tried to tell you, yes. The cost of some goods goes up. That comes at the expense of other goods. Overall, people buying less stuff. That's deflationary. Granted, much higher tariffs, things much bigger deal this time around. But this is exactly what happened last time around. Was you got deflation. Well, it feels good to see that, but I don't think that we're washing out these shorts that I would like to see destroyed, right? I mean, come on. Look at the chart. Look at the chart. It's pretty trivial move so far. Investors could be saying, well, yeah, we haven't really seen the impact of tariffs yet, so we wait another month, right? If next month we still have slowing inflation, then I think they're really going to start to, they won't be able to ignore it any further, essentially. Short-term interest rates rise after CPI data as treasuries add to Fed rate cut bets. There you go, Nassim Taleb. The point isn't to do well when markets crash. Any idiot can profit from owning puts during a collapse. The real skill lies in the staying power and discipline to do okay through the long, uneventful stretches and protracted market rallies. Hey, they're going to come all the way back here? Mm-hmm. Well, Nick Timmero's tweeting CPI was in line with expectations. Month over month. Well, I didn't. So hold on. Yeah, month over month, we were spot 2 versus spot 3. Core, month over month, we were spot 2 versus spot 3. But year over year, we were in line. That must be what he means. 2.8. Yeah, but it is very interesting that it came all the way back, because that was a number that kind of made me think this could really run. They could be giving us a second bat at it. Well, now's a good time to turn the algo on. Maybe if he starts to see some imbalance, it might be worth taking a shot. Man, so the headphones that I had, I was testing them for a while. Had another set of headphones coming, so I returned those other ones. Went back to my old headphones, and I'm like, yeah, that's why I wanted to replace them. These just sound terrible now. So this ear is much weaker than this ear. They're comfortable though. Morning, Uzi. You're late. You're late on CPI day, Uzi. How can? Oh, now that's interesting. Traders continue to bet on first Fed rate cut in September. Really? Let's come and check that. What will they do? What will they do? Fed watch. So we're looking at July. Oh, yes, that is a big change. Because last week, if you did the compare, it was like 60%. Yeah, 1 week ago. So now they're saying September. Okay. Whoa, okay. Well, I saw that one sticking out, and I'm like, whoa, what are they say it's going to be a 50 basis point cut or something? Nah. Okay, so they are betting on September. Very interesting. I guess this is kind of one of the things is, you ever seen this graph where they look at what the market expects interest rates to be and how often it's wrong, and that they always, especially when they're going to cut, it's they're going to cut now and then they don't cut as early as they think, and they just push it back and push it back. That's really what we're getting right now, isn't it? There was a point when they were even saying June, I think. Now they're saying July. Now they're saying September. But the thing that is interesting to me about this situation is that I don't think that they're saying that based purely on the market data. I really think that the current market data suggests that they should be cutting right now, or that they should have already cut. I think that if we add in what we should expect to happen off of all of this craziness that we've had, that they should definitely be cutting. But Powell is saying, no, we don't have to cut. We don't need to do anything. Let's just let this whole tariff thing kind of pass, and then we can decide what to do. So really, the market is pricing that in because of Powell, in my opinion. And so the market is saying that in spite of, inflation slowing, that Powell is going to hold off. In other words, Well, can I go as far as to say this? I'm feeling that the market is saying that Powell will make a political decision with interest rates instead of what the data says. That's what I think is happening. Any good news about you past April work decision? I'm not sure what you mean by that, but I started a job. It's a 3-month contract to hire. So at the end of 3 months, they can decide to hire me. My understanding is that they intend to hire me. I feel that I've been doing a pretty good job and that they're really happy. And they have some big plans. I think the only reason why it wasn't maybe like a direct hire was because, you know, there's a lot of economic uncertainty. And like if the economy went into like a full-on depression and they needed to start laying people off or something, then, you know, maybe they wouldn't hire me. But it seems like things are going good. So right now, of course, we got 2 months left. So let's not count our chickens before they hatch. Like the thing is I haven't changed my LinkedIn status, right? When they hire me on full time, then I'll go and I'll change my LinkedIn. They will see that you're talented. Yeah, well, and you know, the thing is that I think I'm a really good person for this role, because it's not even so much about talented. Like, I do think I am talented in many respects, but the way that I think that I'm talented is I have a way of figuring out things that other people have a hard time with, right? It was always the case. You know, somebody's having a hard time figuring something out, they'd bring me on and we would figure it out. And it was always the case that, like, if I was having a hard time figuring something out and they brought somebody else on, that other person didn't really help, and I eventually got it. It's never been a time where I didn't eventually get it. So in that way that I think I'm talented. But I think the thing that makes me right for this role with this company is that I am very active. I am, like, I have the experience. I know what needs to be done, and I can go in and start doing things without anybody having to tell me what to do. I can tell other people what to do. And, you know, I think that is doing me well right now. Because most of the things that I'm doing, well, I don't know. I'm doing Terraform, and I had to do some tricky Terraform. But most of the things that we're doing right now are not incredibly technically complicated things. It's just a matter of having the experience to come in and have the confidence to go in and change it and so forth, you know? So, and I think that they appreciate that. Yeah. And it's kind of exciting because they are in a spot where, you know, like, they've been doing development for a long time, and they kind of want to move things to a more professional standard and get like a real development group going. So to like be there at the beginning of all of that, the start of all that, is really exciting. And I think that with the things that they're doing, because they're basically kind of moving something that was an on-site service into the cloud, I think that they're going to make big bank doing it, man. You know, it's kind of crazy to think about when I think they're like a $200 million revenue company. And I think that could be several times that. So that's exciting. And the other thing, though, that I like about them, you know, this is the big thing. Can I tell you? I think one of the worst things that can happen to you is making money without purpose. If you're like, you come in and you don't really feel like you found your purpose in life, per se. You don't know, like, what is it that I do that provides real benefit to society, and you don't understand that, and you make money, then basically what happens is you never discover that, has been my observation about people. And these people become drifters, and even though they be supremely rich, they are kind of unhappy about it. They don't feel very fulfilled. Right. This company, they have a mission. They do stuff in education. So they have a mission. They are like really dedicated to it, and everybody's dedicated to it. So of course it's important for employees to understand that like the business's needs, sometimes they don't need you. You need to understand that and do what's best for you as well, right? But because the company actually has a real mission, like completely different culture, and like the employees are genuinely friends with each other, and like there's a real like it feels like what I always thought a real office should be like, you know. So I really like that about it. Oh yeah, Amir says Powell has his own plans. Yeah, I just it really is kind of seems like that since the Federal Reserve decision that the market has decided that Powell will delay things past July. Now, I think that September makes sense. But again, the issue here isn't that like, oh, you know, we push it back because the economy just continues to do better and better than we expect. That's not what I'm seeing. I'm seeing a market where I really think that we should have cut interest rates earlier. I guess one of the things that is good to see is like, I kind of thought, hey, we should be cutting in maybe in January and February, except for reasons. So now we're like 3 or 4 months past that. And we've experienced a lot of market volatility because of the trade war in general. But the world hasn't fallen apart. So that says to me that yes, you don't have to be extremely precise with interest rate changes always. I think we have seen some situations like after COVID where extending it 3 months was really, really harmful to inflation. So it kind of feels to me that like when you are raising rates, you got to be quick. But when you're cutting rates, there's more margin for error. But we'll see. Because the effects of interest rates are lagged, something that you could see. Oh man, this is a really wild scenario to think about, but I think it's actually much more likely than people realize. Donald Trump makes deals with China and all of the other countries, and the tariffs, well, maybe the tariffs stick around and they're at 10%. Let's say that. I think that that's a likely scenario. There is a scenario where we just don't have any tariffs whatsoever. I don't think that Donald Trump wants that. I think that he wants there to be at least some tariff to encourage people to bring their manufacturing back, right? Let's just say that there is like a 10% tariff, right? And everything's all hunky-dory, right? We've averted disaster because he made a deal, right? And then we fall into recession. I think that's a real possibility, is you get into the later part of the year, you get into October, and then a period of economic weakness comes along, and you would say, well, some people might say that it was because we kept interest rates too high and that eventually killed things. Other people will say that the tariffs did too much damage and it just, you know, couldn't go on after that. That's something that could happen. There's big MBOs at 10.5 to 11. I see a lot of stacks at 11.5. I find that awfully curious. Because you're seeing, I mean, the thing to note here, this is one of those situations where the actual resting liquidity actually is important. Okay, so pay attention. That we had a big move up and back down. Market makers stacked here. There's maybe one relatively large order at 07.5, but not much. So it's entirely possible that meta order buys come through and push us higher. But there's going to be a lot of liquidity to push through. Not as much liquidity to push through if we're going to go down. But I'm not really seeing the market orders on the downside. By the way, we turned our algorithm on, did it not? Oh, it doesn't say enabled. I guess I didn't turn it on. Or maybe it failed. Let me come and find my output window. Maybe it died. Yes, it did. It died. Okay, well, that's a little bit better. You see, it's doing this thing where, like, because it should have redone everything from market replay, but the market replay data is all screwed up. Okay, man, they are coming and selling this. So, looking at this now, I'm wondering, is this just, you know, they made the knee-jerk reaction and then it's just rebalancing back to where it was? Or is this like defense? Is this like somebody really, really wants to sell the treasuries and they're using that pop to sell more and keep it on the way down? That does happen when you get really large funds and so forth making plays like that. Is, you know, they save a little bit in reserve so that when a move happens, they can come in and take advantage of the inverse sine law to push it lower, and that kind of skews people's expectations and tends to keep the trade on their side. That could very much be going on. Especially in the 5-year, I am seeing pretty consistent selling. In the 10-year, it's kind of a little bit of a wash. But in the 5-year, it's just... and the 30-year. And we are seeing steepening. Now that's very curious. How are we getting steepening, but I'm seeing more selling in the 5-year? Very curious indeed. Very rare price should move to the sides. I do not agree at all. We've had this conversation before, haven't we? Granted, I can't do like a really long really long study of like over 10 years to see what the tendency is. But during the period that we were tracking it, it was random. It would switch in regimes, but half of the time it would go towards liquidity, half of the time it would go away from liquidity. But in this instance, I think that stacking there was kind of like a warning sign. Like, yes, like maybe we would want to move up because the news suggests that we should move up, but the liquidity is going to be there. It's going to be hard to do so. And they're only adding on this side. Now, if we move back to the open and I see some big stacks behind it, then that would be a different issue. But otherwise, it kind of sets us into a situation where I think that we're more likely to see market buying than market selling, but it's going to be a lot easier for them to push it down, and push it down they did. Here in this case, although we're not seeing it in the 10-year, on the other sides, we are seeing excessive selling. And that's kind of like the big thing to realize, is that what matters really is the market orders. And why the limit orders are being placed there like that, you don't necessarily know. Sometimes they're placing it, like when you see like a stack like that, one of the big things that I would be thinking about is there is a really big meta order being executed. And when those really big ones come in, they like to add a little bit of liquidity to the market. It helps them execute. So seeing that increase in, like just 500 contracts more than usual is a significant thing. By this time, it was only on one side, and it was a very, and it was after a news event and everything. It's a very odd, and I think kind of a warning sign that, that's why I wasn't sitting here looking to buy the bounce. Otherwise, I think I would have been really, really aggressive at. And no, I really think that it should go up, and I'm going to buy the bounce here. Now, to be honest, even at this spot, because they did push, they didn't really get the lows from just before the open or anything like that, and the pre-market lows are way back at 03. But we're already kind of getting backwash. So that kind of feels to me like the push to the downside fizzled out. But I'm really not super anxious to add on it's gonna buy and shoot up and bust the highs. I think that the most likely scenario now is maybe we could go to this, so do you see this kind of uneven distribution? So we might do this and then really build it out until the volume profile looks like this. Something along those lines is what I think is most likely. Okay, my feet are starting to get cold. I'm going to go put my shoes on. Now, one thing that could be interesting is that they do get up to that 10.5 and they fill it. Oh, Suffery just disappeared. Did you see that? It just bolts. You can see him right there. 1,000 lots at 10.5 bolts. As soon as I said that. Huh. I'm just going to add that to the stack of evidence that there's somebody at JP Morgan or some big fund like that watching the stream and messing with us. Oh, jeez. So I went to sleep. There's another thing. It's like I might be like super hyper focused on something. Then I go to sleep and I just completely forget about it until I come in here and start reading Reddit. And Reddit reminds me. So yesterday was the NBA draft lottery. And Utah was basically the worst performing team in the league. Actually, I think that they were straight up the worst performing team in the league. And there was a lot of like rest your top stars so that you lose. So, like, they were really, really tanking. A lottery comes along, they get 5th pick. And everybody really, really wanted first pick because there's like a generational talent coming through. So people really, really wanted the first pick. Who gets the first pick? San Antonio, who was doing really, really well. Like, they had a 1% chance of winning the lottery. And they won. And it was like all 3 teams that got the top picks were all big market teams that didn't really need it. And all of the really small market teams that have been doing poorly get shafted. So everybody thinks that it's rigged. So many people that think that the NBA draft is rigged. And the Utah fans are just very upset. Very upset. I'm a little bit disappointed in the salt from the Utah teams because it is kind of like not that interesting to me. It's okay, you think it's rigged, but I stopped watching the NBA a long time ago. Kind of politics got involved. You know, not only was it like, yeah, I don't think that our team can ever win again because the NBA is explicitly structured to make it hard for small market teams to do well. And then they got the politics involved. And then the game changed and got boring. I just don't watch basketball anymore. And we got hockey. Why would I do that when I can watch hockey? Because, like, they go on at the same time. The dollar is falling out here. See, I wouldn't necessarily say that initial move was like the dollar. Like, we did have like this initial sell and then really quick buy. But now, and that sell kind of corresponds with the treasuries moving higher. But now the dollar is much lower and the treasuries are well, I mean, they're mean reverting, but they're not higher. I should say, because earlier I said, you know, I don't really think that they're going to bust a high. I shouldn't like completely rule that out as a possibility. But it's one that I don't see. Oh, by the way, do we... Something's very, very wrong with this chart. My data must be corrupted. The cursor's working. So I'm still kind of thinking maybe it's a Ninja Trader problem. Reload all historical data. By the way, oh, this is is that correct? Yes. Like, I see it with my own eyes, but I don't believe it. 11 is the stop out zone long. So that might make it difficult for them to continue pushing up. That is right about where that really big order at 11.5 is. But could we get a runway if they are able to push up into this 12 zone? I think so. So that's something I might want to keep an eye on. Let's try turning the robot on one more time now that I've reloaded the historical data. Some of the MBOs are back. Well, you can see down here the liquidity down in the 08 to 06 zone looks healthy, but it's not as big as it was on the offers. I do think, though, if we're able to get through those big orders and everything, that kind of suggests to me that somebody got caught offsides big time and that it really could be a trend day. Normally at this point, I'm kind of have already ruled a trend day out, you know? Granted, the volume in the 10-year here still looks kind of a little iffy. So, man, and adding... Oh, it died again. Object reference not set to an instance of an object. I'm wondering if I should try to debug it. I think I'm going to try. I at least want to know which line is doing that. I really wish that when you get like an object reference error, that NinjaTrader would tell you the line. Why doesn't it just tell you the line? That's so annoying. Although part of the problem is that if I enable it again, it's not necessarily guaranteed to get that object reference error. Try it again. Kind of feels like that as soon as those MBOs came back that there was a regime switch and we started falling down again. Dude, NinjaTrader is screwed up. So I just came in and was like, okay, reload all historical data. It reloaded the historical data for ZB and not ZN. That's kind of got me thinking that maybe I have something corrupted in my workspace and I need to just build a new workspace or something. Ninja Trader's definitely having some weird issues here, man. Because it's not loading the new bars. My ZB, if you come over here and you look at my ZB. It's not loading. Nothing's coming out in the output window. Oh, and I'm not even getting a breakpoint. Close Ninja Trader, restart it. Yeah. I try to close Ninja Trader and it doesn't close. Oh, there it goes. There it goes. So we had an issue on Friday, then it was fine yesterday. Now we're having an issue today. Just gonna check one thing, make sure that there's not like a disk space problem or anything. There is a disk space problem. Let's fix that. That's what's going on. It should be telling me when that's happening. Why doesn't it tell me? What does that do? That's 80 gigabytes. I should have way more than that, though. Let's see here. What's the name of the... I think WinDirstat is what I've used in the past, right? Okay, we're going to try Wiztree. Might be that NinjaTrader is just taking up massive amounts of space. Let's come in. When I look at my NinjaTrader 8 folder, mm, 69 gigabytes. Wow. How much of that is my saved folder, though? A lot of it, actually. Wait. That's interesting. Huh. Am I not getting the data pipe as of no? It says that it looks like it's doing the data pipe. 0512. While we're at it, I'll come in here into Steam and see if there's anything I haven't been playing lately that... Oh, yeah. fast. Oh, I've got cached media in DaVinci Resolve. That'll do it. That'll do it. Look at that huge chunk of stuff. Oh, Helldivers is on there. We could get rid of that. I don't remember how I have that installed. Oh, I have Revo on installer here. Okay, I'll do it with that one. So if I rescan, does it see it? Is it gone or is it? Because that was like so instant that it makes me think that it didn't actually. Okay, I guess it did. Wow, I've got a lot of stuff in downloads too. So let's fix that. Wow, that's a lot of data in Docker. Oh, those are all photos. Might as well while we're here. I'm looking at this and I'm like, well, I've definitely cleared up enough to be okay. Let's do start Ninja Trader up at least. I don't know if it should have fired. The volume through all of this seems pretty flat. Learning by your bids plus grading, yeah. What I would do is I would read all the Grady stuff first, and then I would go and I would watch my order flow series. Oh, it's not archive is not where I want to put it. It's this one. Yeah. That'll take a while. In the meantime, we can restart Ninja Trader though. It's kind of crazy to think about how much disk space I use. Oh, you're doing the IQ feed one? Yeah. IQ feed is a very expensive data feed, right? If you get Rhythmic, it's much, much cheaper. Okay, so far so good. Enabled. Is it as good with regards to tick accuracy, speed, or is it kind of negligible? So there is a noticeable difference in the quality of the IQ feed and Trading Technologies data feeds compared to Rhythmic and CQG. But I'm not entirely sure if that advantage makes you money. Like you can tell a difference because like the updates don't chunk as much. So when you see a bunch of like 1,000 orders cancel, you might see that as just 1,000 orders pulled away, versus when you do it in IQ feed, you see a bunch of little one lots cancel all at once, and you can kind of see go like. So like there's a difference, and it's really nice, and I prefer to see it that way, but I don't know if it actually explicitly provides an advantage. Thanks for the info. No problem. S&P 500 not looking so hot on the open. Yeah. So one of the things was there was a time where I was like, maybe I should just use IQ feed. I wanted to use it. Well, one of the things that IQ feed does is there's like a little system process that runs, like you can see it in your system tray, and it runs with high priority. So if you get like a really big push of market data, it will like dominate and ensure that the data comes through and prioritizes that over everything else. And the issue for me was that when that happened, the stream would cut out. So we couldn't use IQ feed with the streaming. Now, maybe now that I'm doing the encoding on the video card and everything, that's not as big of an issue, but at the time, that's what the situation was. So how much of this disk am I using? I've got 20 terabytes, and I am using... No, that's not right. Maybe it is archive. This is 2 terabytes. Oh, no, it's 4 terabytes. This is a 4 terabyte drive. And this one is... well, and I did that, and there's not much space left on it. Oops. It's okay, actually. Okay, but I've freed up about half of my disk now. I guess maybe it might be time. So I was thinking about, do I need more archive space? Not quite yet, but maybe it is time for me to get a second drive, like a second M.2 drive. Granted, I clean everything up and we're fine, so... Okay, and when I tried to enable the strategy, it still gave me the error. Now, it might be... So what I'm going to do here is I'm going to come into my cache here. That's weird. Why did all 3 of these get modified today? Well, Oh, do I have market order imbalance over on here? I do. Those ones seem fine. I think that some of my caching is a little bit corrupted because it couldn't save to the disk, essentially. Oh, now hold on a second before I do that. This is giving me a different error. Input string was not in a correct format. So I might actually be able to see where the corruption lies. GK, I wish everything would just run on a Rice distro of Linux. I'm sure there's a way, but it's just too time consuming to figure it out. Well, for the trading tools, I don't think that they would run on Linux very well, but you know what would be a better thing would just be for Microsoft to put their full effort into Windows again and make a good operating system. Because the one that we got right now is I think some problems. Okay. Not getting that same issue, but okay. Yeah, no, I think we're good. Now let's see how that goes. Oh, no, that can't be right. See that the most recent bar is 728 and it's 738. I feel like that NinjaTrader, like the disk running out of disk space, like really explains why NinjaTrader's been falling over. But then once you've gotten it into this state, like how do you fix it? Does it just need to be enough days that it's outside of the window or whatever? Because you see this chart right here, it's not loading the last 10 minutes. And it's kind of like running chunky. I was doing some digging. Oh yeah, I haven't made a video about the market order imbalance. We should. But came across your interview on NinjaTrader's official. Oh yeah, well I've been on there a couple of times. So I haven't been on there since they changed things up though. You don't seem to get nervous. Not anymore. You know, I think that there was definitely a thing earlier on where like maybe I would get nervous about things, but I would just push through it. But now talking to people does not make me nervous. It's kind of almost like weird to me that it would make someone nervous. Now, it's a little bit different when it's online, because when it's online, it's really kind of like you're talking to yourself, you know? But I'm sure that I could stand up in front of, you know, a billion people and would be just fine. Okay, now it's loaded, and now it's all kind of silky smooth. Now we're going to try enabling it. It's more about how it's recorded and lives forever. I mean, the thing is that I'm definitely willing to wade into controversial topics and so forth. But I feel that what I say is relatively measured. You know, like I see these things where influencers get in trouble for saying certain thing and get in like big trouble. And I don't see that happening to myself. If I did get in trouble, it would be over something that I would be belligerent about, you know? Be like, no, I said what I meant and I meant what I said. So I disabled it, and now I've enabled it again, and nothing's really happening. Unless it already disabled it, but I can still see the check mark enabled, so I think it's still enabled. Now that we've updated things, you can see very clearly that, like, it just kind of went dead. So, you would think that the month-over-month data should be a significant thing, but, and it, primarily because it looked like the market was all kind of waiting on it, right? But we're seeing that the market ultimately has decided that they don't actually care, that they think that what happens next month matters more or something like that. Well, I think that was the last chance to try and enable it. I've spent too much time on that already. See if we have better luck tomorrow. I should add something. Do I have... over here. Oh, I do. I have indicators on my desktop to show me like how much disk space is there and everything, but just didn't pay attention to it, I guess. Wiztree was kind of nice though. Okay, close that down, didn't I? Yeah, okay. Now, I wonder, though, tomorrow? Oh, not tomorrow. Thursday. Gotcha. Thursday, we will have PPI and retail sales on the same day? Okay. Well, for retail sales, the forecast is 0. I think it might be better than 0. Like, I was going to expect retail sales to be bad, but not 0. It might be higher than that, and then we would say, it's because, like, demand got brought forward, right? For PPI month over month, they're looking for a forecast of spot 3%. So if that came out and that was like at spot 3 or spot 4, then I think that would be a pretty big deal. Like, that would mean that, like, we are getting inflation and the producers are essentially just eating the cost and not passing it through to the consumer. If we don't see the increase in inflation on the producer side either, then, well, they might still ignore it. They might still say, yeah, but it's not going to change the Federal Reserve's opinion. Have you ever checked out the chart part of Jigsaw? It looks very much like... Yeah, we can use their charts. I just... Because I can't do custom stuff with them, I haven't messed with it too much. If they added custom indicators, I'd be all over it. If Jigsaw adds custom indicators, I will be the first person to put custom indicators out. Okay. I also put together a thing for them that was like, okay, here's all of the features that you would want to do to add spreads to your charts. But I think that they've been focused on other things. Well, this kind of push down to the bottom of the range seems awfully sudden, doesn't it? I kind of wonder if we had been able to activate our algorithm, if it would have taken a short here. Yeah, once again, it's like not loading data. Focused on what? Well, so they made like a Jigsaw 3.0 essentially. So they redid some significant parts of the infrastructure, and they redid the Vista chart, so that the Vista chart is a lot faster and performant and so forth. I always kind of hated having the Vista charts up because they were kind of like resource hogs, but they've kind of like changed everything up to be like fully done on the graphics processor and everything. So like, it's a pretty significant change to the platform, even though it doesn't necessarily result in a lot of new features that at least I would use. So now I don't know if they, I got the impression at least, that they were going to allow custom indicators. So that might be there too. Because if I could do the spreads, if I could do the spread charts on Jigsaw, I would maybe switch. I don't know. I mean, the inventory cost basis is an important thing, I think. I would want to keep that. Man, I've had the window open this whole time, and it does not really feel cold in here. Maybe I just need to leave it open all night. When you say spreads, I mean like I want to be able to chart the spread between the 30-year and the 10-year. See how the yield curve is changing. That's really important to be able to see in order to adjust your reading of the order flow in the treasuries. I'm kind of, by the way, looking at my spreads. So, do you see here the knob spread, the 30-10 year spread has been steepening pretty aggressively, especially on this most recent rise. And yet, ZB did not make new lows, even though the 10 and the 5, well, the 10-year did. The 10-year made new lows, the ZB didn't. So what's with that? That's kind of weird. Like, it is steepening, but it seems to me that the front end of the curve is leading. So that's a little unusual. Are we seeing a move in the dollar with it? No. Are we seeing a move in the Japanese yen with it? No. We are seeing gold follow it. We are seeing the S&P 500 push up. So best indications we're getting is that this is more equity correlation. Treasury equity correlations? Maybe. There's definitely some big orders they pushed through here. And 13,000 net contracts to take it to the new lows. So, you know what's something else that we should consider with the treasuries here? Because again, like the whole thing is that I really feel like that interest rates are too high. I think that we should be closer to 4%. I just don't think that 4.5% really makes sense. But there's maybe some defense being played. There's a lot of people short. But I think that one of the bigger theses for these guys that are short is that the government is going to have to issue a lot of debt here. It could be the case that, you know, the government comes in and they sell all of that debt, and that's really, really hard, and they it really pushes rates up, right? But then after that, the big flood is gone, you know, and the chaos that would probably cause. You could see a situation where like rates rise dramatically and then decline like big time. That's maybe one thing to keep an eye on. But you know, there's some big news on Thursday. Let's wait till Thursday, see how they react to that and how they perform in the meantime before I try and make any huge proclamation. I think that if I'm investing in treasuries on a longer time horizon, like 5 to 10 years, that interest rates are high and they will come down. But I'm starting to lose confidence that it's going to happen this year, which kind of makes me a little sad. I really think that we need to get interest rates down for the tech industry to come back and for people to you know, people's incomes to start catching up with inflation and stuff. Trump is speaking at 10. Oh yeah. Well, the treasuries are probably the most economically sensitive instrument. So they react to everything. And there are things, with Trump, maybe not an example of this, but there are some things that treasuries will react to more strongly than ES. There's very few things that ES will react to more strongly than treasuries. So particularly when it comes to economic releases and like what Donald Trump says. So well, with that, I think I will shut my platform down when we end the stream today instead of leaving it going. And let the computer rest a little bit. Maybe even do a restart tonight. But good cleanup. I guess I accomplished something today. Kind of funny. I'm in this mode where like I'm anxious for like, you know, I want to see, yeah, let's get through this week. But it's not like I'm actually looking forward to anything, or there's like something that I'm gonna do next week or so. It's not like that. So that's kind of annoying to me. All right, guys, there's the bell. I'm gonna get going. I will see you guys tomorrow. Stay excellent.